Good morning, team. Good morning to all of you on a terrific Tuesday, 7th of September. Welcome to another Wealth Coffee Chat, gang. Good to see the regulars jumping on. Do the quick intros as we do. Welcome back to those who already know what the show is all about, like Alison and Margaret and Nicole and James and Seneth and Chris, Laura, Aaron, Nicole, Nick. There you are. Welcome back, team. Great to see all of you guys popping along. If you're new, if you've just joined the mentoring and the coaching program, and this might be the first time this is popping up, give us a shout out in the chat. Say good day. Say hello. Tell us where you're from. Tell us where you're dialing in from. Stephanie and Simon, good morning to you guys. Great to see you jumping on. There's Bob. Sean. Fantastic. So listen, team, today I wanted to talk to you guys about something we've probably chatted about before, but it's important to sort of, kind of circle around and revisit our foundational pieces in our real estate strategy, our thoughts, if we set out, we set some parameters around how we're going to invest. Are they working? Do they work? Will they make sure that, we get the result that we want? Today, we're going to have a look at the 5-city strategy. And this is something that Sam particularly and myself have refined over the years to really sort of dial in the best opportunity for us as property investors to get some wealth and some exposure and entry into the market, minimize some of our risk, maximize some of our opportunity, because the idea is, team, gang, that not only now we want to take advantage of what's going on in the market, but also into the future, there's a few things to consider. So let's have a bit of a chat. Let's have a bit of a yarn about what that might look like. The 5-city strategy, the diversification process of us as property investors and what we're up to and where we're going. So one of the challenges right now, and I'm going to draw, hang on, that's not very good. That's a bit too much. Let me see here. I'm going to draw myself a terrible Australia. It's looks like a bad tooth, doesn't it, really? I probably should practice this one a bit more. But there you go. There's Australia. Well, it's kind of Australia anyway. Good morning, Andy. Good to see you, mate. Joel. Hey, there you are. Good to see you. Stephanie, all the way from Tamworth. Good to see you. Fantastic. Thanks for dialing in. Fabulous to see you. So, what do you think, folks? Good picture of Australia right now. But tell me, when we're looking at, my very rudimentary, year 2 drawing here, when we look at Australia, it's a big place. And as property investors, we're like, well, where do we invest? How do we structure? How do we get hold of this thing? And where and when do we take action? Which place, which location, etc.? Where are we going to invest? And the idea, we need to refine or rationalize in our mind is, how do we deploy, how do we spread our resources across different marketplaces as we look at this wonderful map of Australia? So if we're having a bit of a chat right now, gang, and we're sort of chatting away and say, right, what do you think, team? Which marketplace is booming right now? Which marketplace is going off? What do you guys think? Tell me from a state point of view, not down to a town just yet, but a state point of view. Give us a shout out in the chat, which state would be the state of consideration right now. If you were starting out, or if it was your second investment and you're just getting yourself going, what place, what state would we look at? And Nicole says Queensland. Someone's talking about the live, work, play triangle, which is fantastic. Sam talks about that all the time. And Nicole, I reckon you're on it. A lot of people, and there we go, a bunch are jumping in there right now. And we're like, yes, absolutely. Queensland right now is given a bit of a run. Now, that's a market that people are paying attention to. And for the most part, yep, absolutely, we're getting a bit of momentum, a bit of run. It's a winner. Away we go. Andy's saying Adelaide 12 months ago. It's always like there's a joke that goes around Andy. Hey, when's a good time to buy real estate? And the joke is about 5 years ago. But anywhere from today onwards is probably fine, as we roll. So, there's a few different conversations going on here, Gold Coast, Victoria, Adelaide, etc. But for the point of the demonstration this morning, the idea is the marketplace, everyone's talking about Queensland, right? Everyone's talking about Queensland, and it's got momentum, it's got pricing, it's got rental yields. There's a lot going for it. Let's face it. There's a lot going for Queensland, which is fabulous. I like it. And let's say, all right, okay, team, we're going to invest in Queensland. And as we sit here and think, all right, well, that's great. Queensland's going well. You might be encouraged. You might get excited about investing in Queensland. And let's say right now you've got the ability to buy 3 properties. So you can buy 3 properties right now. You've seen your coach. You've got a strategy. You went to the finance expert, and the finance expert laid out a really nice plan. You've got buying power, the ability to buy 3 good properties. Make sure the rental yield's 4.5-5% minimum, you can probably divide, $1.5, $1.8 million worth of buying power over 3 properties to make a, $550,000, $600,000 purchase. And let's just say that's a scenario, because that's a scenario we see fairly often here in our coaching world, in my coaching world, in my team's coaching world. All right, you've got the ability to buy 3 properties across your buying power and your situation. Right now, team, would you, a very educated investor might be very keen or committed in buying 3 properties in Queensland. What do you guys think about this? What do you think about a scenario where we go, no problem, we should buy 3 in Queensland and just go for it? Now, the challenge for me with that seems to be not when the good times are here, but when the not so good times are here. So for me, team, I wouldn't be doing that. That's not a solid strategy when it comes to you and your diversification of wealth, right? A few things that we got to consider when we're looking at this. And it's never a absolutely no, but 9 times out of 10, James and Melinda, there's not enough diversity. Allison's saying let's buy in different states, and I 100% agree with that conversation, because we need to have a think about a few things, all right? And this is how we approach some of these rationalizations when we're talking with investors. Number 1, where is your own home? Okay, your PPR. Okay, now that's quite a lot of wealth as well. Your home usually is the foundation piece, the foundation stone of launching, because you use equity. Where is your home? Number 2, where is your job, business, or career located when it comes to its earning potential? Okay, and then number 3, where are your investment properties? Now, you got to think about it in those terms, team, because imagine this. Imagine you had your home in Queensland, you've got your business job in Queensland, and then you wanted to buy 3 investment properties in Queensland, and it would be even worse. Let's say a few people asked about the Gold Coast. Julie's saying, hey, you should buy on the Gold Coast. Gold Coast is doing quite well at the moment. But imagine this. Imagine you lived here and you had your home here, you had your income here, and then you bought your investment properties here. Extreme economic focus in one small, quite weak economy, really. Gold Coast is a weak economic city. So, team, this is the idea. There's a few people saying it in there. The idea that we need to diversify. All right? Diversify. And as we go, what I would look at in this scenario, depending on where the person lived, I would probably, depending on how many properties they had, but maximum 2 investments there. And I would probably go, one in Vic or maybe even one in Adelaide if you like the idea of it, depending on your budget. I would prefer Victoria. Right now, I think it's super underpriced in certain places. Houses have bolted a little bit, but apartments and townhouses are very well priced. Maybe a Newcastle, etc. Now, that's not market recommendations. I'm just talking about the diversification of the locations as we go. And we think about that as we build our property portfolio. Okay, gang? Don't be overexposed with your real estate in one place, all right? Or your wealth in one place. It's not about only your investment properties, team. It's about your home. It's about your job. It's about your business. It's about your career. Don't get overexposed, okay? And the other thing, and this is the thing I wanted to mention today, don't get all caught up with, Queensland's booming or Victoria's booming or Adelaide's booming or whatever. Like, don't get caught up in that rhetoric and you dive on in, because let's say the timing's not great. Let's say next week some crazy politician announces in Queensland that I don't know, there's going to be no, we're going to double or triple the rates for every property owner in Queensland because we need to get back all the money we spent in Corona. All right, let's just say that happens, and that's not too far of a stretch to actually see it happening, to be honest. But let's say something mad happens like that, and then Queensland comes to a dead stop. Like, actually, you know what? I don't know if anyone remembers this one. Anyone remember when New South Wales decided that it was going to have an exit tax? And not only were you paying stamp duty, capital gains tax. Yeah, I'm not gonna jinx it, Alison. Yeah, keep it quiet, Jason. All right. Okay, this is just an example. New South Wales said, like, some crazy politicians in New South Wales said, "Oh, we're gonna have an exit tax, just after the GFC, on top of capital gains tax." Yeah, on top of capital gains tax. I know what they were thinking. That market. The New South Wales market just plummeted. It shat itself. All right. Anyway, my point is, don't be exposed in one area. There's lots you don't control. You don't control politicians. You don't control, local government, weirdnesses, all that sort of stuff. Yeah, as you go. And whoever that was, you're probably in one of the groups. Boom, you nailed it. Land tax. Team, land tax. Now, we pay land tax on the value of our underlying piece of land, our rateable value of land. And maybe you did buy 3 properties in Queensland, and for the moment, there's no land tax payable. But in 10 years' time or 15 years' time, when those land values go up, do the calculation on the land tax then, team. All right, have a look at what that's going to be. Okay, so there's plenty of ideas. There's plenty of good conversation, very rational conversation, very smart conversation to be had to diversify your property portfolio for all sorts of good reasons. Don't get overexposed economically. A little bit of diversification across different states and different political risks, different economic risks, costs, land tax, etc. The other way to diversify, team, in areas is to diversify in property type. Now, I'm not talking commercial, industrial, retail. I don't believe at all that the majority of property investors who want a simple buy and hold property investment portfolio should own commercial real estate. I firmly think that's a no-no. the risks are way too high, and I've said that a bunch of times. But the diversification in apartments, townhouses, and houses. Okay, so I've got an apartment right near the city. It's worth a lot of money, but its land value is actually quite low. And so my value can rise, but my land tax portion in my apartment is bugger all. And people go, land goes up in value. Well, no, locations go up in value, gang. Let me tell you about that. And those locations rise significantly in rent. But that's not what this is about today. Diversify. All right, we got it. I think, Jason, move on. Diversify is the thing that we need to understand. That's important. Now, I've had this before. One of the problems with diversifying is you'll get someone who understands the concept, diversifies into, let's say, Melbourne. Let's say diversifies into Perth. Nicole, Perth is a pretty solid town. It's going fairly well at the moment. Let's say you diversify into Perth. And then Perth just goes sideways or regular for a little while. And then there's this, there's this bloody mental battle we have with ourselves. Oh, I shouldn't have listened to Jason. I should have bought 3 in Queensland. That would have been best. And it would have been. It's easy to look in retrospect. But what happened if Queensland crapped itself? Team gang, you've got to put your strategy higher, your long-term strategy higher than your short-term tactics. Okay? If you want a long-term, solid, safe, reliable investment spread when it comes to your portfolio. Anyway, you guys get the picture. Hopefully that's making sense. But check out this. All right, let's check this out. The 5 cities plan, what we have done this. So we had this plan a long time ago, and it's not like we made it up. It's something that made sense to myself and Sam. We believe that you should be diversified across 3 states, ultimately. That is a good diversification. But just imagine this, 5 cities plan. You bought one in Sydney, you bought one in Melbourne, you bought one in Perth, you bought one in Brisbane, you bought one in Adelaide in 2019. Team, this was 2 years ago. We've been talking about the 5 cities plan for over a decade. But check it out. The exposure, we've talked about these numbers before. The buy well, never sell, get 5, keep them, buy really good properties. This thing's a marathon, not a sprint. Imagine you were able to deploy in 2019 in this way. What would be the outcome today? That's the average property price there across those marketplaces. Let's go and have a look at this. If you guys have a look here, median house price in all of those locations has gone up on average, over $100,000. Pretty tidy. Just have a look at Sydney. Up over 400. Melbourne. I'm making everyone sick there. I would do it like this. All right. Hopefully you can see that. 500 for Sydney. Melbourne's up 200. Brisbane's up almost 200. Adelaide. Adelaide up almost 200. Oh, it's over 200, over 200 or nearly 200. Perth's the only one that's not up. Average house price, much, but it's up $20,000. How about that, team? How about that? All right. What do you guys think about that when it comes to the exposure of the 5 cities plan? So imagine you were in the mining boom and you bought a truckload in Perth, but you didn't have any other exposure in any other eastern states or the cities. So that's the idea, team, when it comes to, let's have a look at what we might do with our portfolio. The idea that, yes, markets are booming. Yes, if you can take advantage of those markets at the right time, perfect. But sometimes that's not the point if you're building a long-term, solid buy and hold portfolio as you go. So anyway, hopefully that makes sense, gang. It lands. You get you thinking out there as you go. All good. Bob said, do we use a buyer's agent or do you go on a holiday? Mate, like I'm a big fan, Bob, of visiting the areas you're going to invest in. Absolutely. I think that's important. It's a bit hard at the moment. So, a good investment agent is absolutely critical to what you want to do long term, and one that knows a bunch of different areas, preferably. And so, my team at Positive have been doing that for over 20 years. You can get specialized local buyers agents, which are sometimes reasonably good. But again, like with all industries, there's great ones and there's not so great ones. So you've got to just do a little bit of your research and also be very specific about what you're trying to get, because they're not everything to everybody, okay? Sometimes they specialize in certain things. Specialize in a splitter. Specialize in a reno. Specialize in buying, brand new properties or something like that. Find out what they specialize in as well, Bob, if you're doing that stuff. Well, there you go, team. That's about it. Wealth Coffee Chat done and dusted. Hopefully you guys got a little bit out of that today, and understand that the 5-city strategy, the creation of your solid investment strategy and portfolio, needs to be tempered out, not good time, Charlie. Let's invest everything we've got in Queensland because it's the one that's booming. That would be a mistake as far as I'm concerned. But with your tactics and your strategy and your coach, you create that the idea of your investment plan and follow it through, so you don't get caught up in the good time, Charlie activity. And you create an actual property portfolio that you're happy to own forever. Buy well, never sell. That's what we say around here. This thing's a marathon, not a sprint. We're going to go the distance together. All right, team. Well, you guys have an awesome day. Wealth Coffee Chat done. See you tomorrow, around about the same time, 8:05 usually. There you go. All right, team. Bye-bye. You guys have a good one.